You see those bank ads everywhere? Open an account, get $300 free. Like the universe just decided to hand you cash for existing. Ever wonder why banks are so eager to give away money when literally everything else they do is designed to extract it from you? Today, I'll explain bank account bonuses like you're 5 years old. By the end, you'll understand exactly how these free money offers actually work. You'll also know who really wins, and whether you're getting a deal or just becoming the product. Here's what the ads don't tell you about these offers. That $300 bonus comes with more strings attached than a puppet show. Most banks require you to park anywhere from $5,000 to $25,000 in the account for 3 to 6 months just to qualify. Open account, move money, wait, collect bonus, celebrate. Except here's the problem. While your money sits in that checking account earning exactly 0 interest, it could have been working for you somewhere else. Imagine someone offers you $300 to watch their goldfish for 6 months, but you have to quit your job that pays $500 a month. You're not making $300, you're actually losing $2,700 in the process. That's exactly what's happening here, just with fancier language. Let's do the actual math, because this is where it gets interesting. Right now, high-yield savings accounts are paying around 4 to 5% interest. If you've got $10,000 sitting in a checking account for 6 months to claim that bonus, you're missing out on about $200 to $250 in interest. So that $300 bonus just became a net gain of only $50 to $100. And you haven't even met all the requirements yet. You're basically working a part-time job where the boss keeps adjusting your paycheck downward. Now let's talk about the fine print, which is written in that special font banks use that somehow makes your eyes glaze over. Most bonuses require direct deposit, not just any deposit, but specifically your paycheck or government benefits routed through their system. That means calling HR, filling out new paperwork, waiting 2 pay cycles for it to process, and praying you didn't mess up your account number. One wrong digit means your rent check bounces and your landlord gives you that look. And here's the kicker. Some banks specify minimum direct deposit amounts, like $500 or $1,000 per month. If your paycheck doesn't hit that threshold, the bonus evaporates. But wait, there's more surprises hiding in the account terms. Monthly maintenance fees are lurking in the shadows. Most checking accounts charge $10 to $25 per month unless you meet specific requirements. You need to maintain a minimum daily balance, make a certain number of debit card purchases, or keep that direct deposit rolling in. Miss the requirement even once, and boom, there's a fee. You went on vacation and forgot to make 5 debit card purchases that month? That's a fee right there waiting to hit your account. Your paycheck came in 1 day late because of a holiday? Probably another fee waiting for you in the wings. It's a subscription service you didn't realize you signed up for. Here's where things get really sneaky with these promotions. Banks know most people won't read all 47 pages of the account terms and conditions. They're counting on it, and that's by design. Banks make these bonuses complicated on purpose because complexity favors the house. Every extra requirement is another opportunity for you to slip up, miss the bonus, but still generate fee revenue. You thought you were the customer paying them? You're the product, and your attention span is what they're selling to their shareholders. The direct deposit requirement is especially annoying because switching your paycheck routing is genuinely time-consuming. You've got to update it with your employer, wait for it to process, then remember to switch it back after you've met the requirements. And if you're juggling multiple bank bonuses at once, trying to track which paycheck goes where and when, you've just created a part-time job managing your part-time job of collecting bonuses. You're not gaming the system like you think you are. The system is gaming you instead. Here's something most people miss. Some banks have clawback provisions buried in that fine print. If you close the account within 6 months to a year after getting the bonus, they'll literally take the money back. It's like lending someone money and then asking for it back weeks later. So you have to keep the account open for months or even a full year. You've got to keep meeting those minimum balance requirements or keep paying those monthly fees long after the bonus hits. That $300 is starting to feel more like a hostage situation than a gift. Let's talk about opportunity cost, because this is what really matters. You're moving money around specifically to chase bonuses, tying up cash in accounts with requirements and fees. You're not optimizing your finances the way you think. You're doing unpaid work for a corporation that's already profitable enough to air commercials during the Super Bowl. Think about what else you could do with that time and mental energy. This matters to you because time is the one thing you can't get back. You're setting calendar reminders for when to make deposits, when to make purchases. You're tracking when you can finally close the account without penalties. You're basically project managing your own bank account. And for what kind of actual return on that effort? Maybe $100 to $200 in actual profit after you subtract lost interest and potential fees? You could literally make more money selling stuff from your closet online, and at least then you'd have less clutter. Here's what you actually need to know before chasing any bank bonus. First, calculate the real profit after accounting for lost interest from high-yield savings accounts. Use actual current rates, not fantasy numbers. Second, read every single requirement and ask yourself honestly if you'll remember to meet them without turning your life into a spreadsheet. Third, set phone reminders for everything you need to track. When to make deposits, when the qualification period ends, when you can close it, when to switch your direct deposit back to your main account. Fourth, and this is critical, only do this if you were already planning to keep that exact amount in checking anyway for bills and expenses. If you're moving money specifically for the bonus, you've already lost. Here's another angle worth considering that most people ignore. The psychological cost of tracking all these requirements is real. You're adding mental clutter to your daily life, worrying about whether you've met some arbitrary threshold set by a bank. That stress compounds over time, affecting your decision-making and relationship with money. You start viewing your finances as a series of hoops to jump through, rather than a tool for building the life you want. That shift in mindset costs more than any bonus could ever pay. Some people treat bank bonuses like a hobby, churning accounts every few months, tracking spreadsheets, optimizing every dollar. If that's your thing and you genuinely enjoy it, cool, no judgment. But for most people, the mental bandwidth required to successfully navigate these bonuses without getting hit by fees or missing requirements just isn't worth it. Your Saturday afternoon has value. Your mental energy has value. Your ability to not think about banking requirements while you're trying to relax has value. Here's the alternative nobody talks about. Just find a high-yield savings account paying 4 to 5% with no minimum balance, no fees, no direct deposit requirements, and no hoops to jump through. Set up automatic transfers from your checking every month. Ignore it for a year. You'll make more money than most bank bonuses with exactly 0 effort, 0 stress, and 0 risk of accidentally triggering a fee. Boring? Absolutely. Profitable? Way more than you'd think. Sometimes the best financial move is the one that requires the least ongoing management. There's also a broader principle at play here. Banks design these offers to look appealing on the surface while hiding the real costs underneath. This same pattern shows up everywhere in financial products. Credit cards with introductory rates that skyrocket later, investment accounts with hidden management fees, insurance policies with exclusions buried in fine print. Learning to spot these patterns in bank bonuses trains you to recognize them elsewhere. That skill is worth more than any single bonus. To recap, bank bonuses sound amazing until you calculate lost interest from parking cash in 0-yield accounts. Direct deposit requirements mean paperwork, waiting, and remembering to switch everything back. Monthly maintenance fees lurk behind minimum balance requirements you'll probably miss at least once. Clawback provisions mean you're locked into keeping accounts open way longer than you'd want. The real profit after all costs and lost opportunities is usually under $100, which is less than you'd make from any side hustle that doesn't require reading legal documentation. So here's the real question. Is the amount you'd actually profit from these bonuses worth the time, stress, and mental energy of managing all the requirements? Or would you rather put that same effort into building wealth that doesn't require constant babysitting?